Asian demand picked up during gold's recent price drop, but now that gold prices seem to be picking up steam, will Asian demand continue to climb? We've got a guest who can comment on the matter, Kiener. He's the Managing Director and Chief Investment Officer over at Singapore-based Swiss Asia Capital, an asset management firm. Thanks for joining me today.
Yes, good morning or good evening. Depends which side of the world you are.
Exactly. All right, let's start off with the recent strength of gold prices. Now, we've seen fresh buying with uncertainty in Europe. We've seen some low GDP numbers coming out of China, maybe indicating a slowdown in global economic growth. So, what do you make of gold's strength right now, and do you think this might be short-lived?
I think what we've seen, for the last couple of years is the Fed's news flow that we're going to see higher interest rates and tapering and higher interest rates. And I think that's a bit scaremongering. Global economies are very, very weak. And they're weak because of the excessive debt levels which we have. And this amortization of debt, or the payment flow which this debt requires, is suppressing economic growth. We have no capex, basically almost globally. We have overinvestment, which we basically created, particularly in Asia, during the boom from 2008 to 2013. And this overcapacity is right now creating margin compression. So that's probably quite positive for equities, but it's not great for economic growth, and therefore interest rates will stay rock bottom until the market basically is carving in because either of peak debt or because of default.
Right, the Fed. Everyone seems to be focused on the Fed meeting next week. Now, analysts that we are speaking to seem to think that QE is going to come to an end next week. Rate hikes don't seem to be in the cards just yet. What kind of effects do you think the meeting next week will have on the marketplace, whether it be gold, equities, bonds, whatever you see?
No, I think basically we are moving away from taper. We're going to move into QE. We're going to get extension. We're going to get more money being contributed. We're producing right now about $200 billion a quarter plus. If you look basically at the balance sheet addition of that, we're running close to $1 trillion still. So nothing has changed these last 3 years, but perception has changed. And this perception, I think, will come back to where we were about 2 or 3 years ago.
So you're thinking that quantitative easing may just continue for the time being?
We continue to ease anyway. We continue to issue debt into the system. That has not disappeared. My fear is that if the economy continues to weaken even further, going after winter into spring next year, is actually that the number will increase again. And that will probably result in further debasement of money.
Seeing that you're based in Singapore, I wanted to get your thoughts on Asian demand. We saw it was a little rough and tumble over the summer, but it has picked up a little with gold prices weak in the last couple months. But now that gold prices are picking up steam, do you see continued demand in the Asian market?
I think, each time we get weakness, Asians like sales. So the moment you get something on sale, people step in and buy more. And I think if you look at the last couple of months' numbers, particularly in these festive seasons, they're basically eating up on an annualized basis. If you look at China, basically the global supply, and India about half of it. So Asia will take more than the production capacity of the world of the market this year. They will do next year. They will have done that last year. And the shortfall gets supplied either by Western central banks or by GLD.
Now, Jürgen, before I let you go, I wanted to touch on gold prices moving forward. Now, I've seen market notes from you in the past, and you were calling for $3,500 gold by 2015. Now, I was just curious if you maybe revised that forecast?
Look, we've been looking basically at an appreciation curve going up since basically 2001. We were quite highly overextended in 2011, but we are now at the bottom of this curve. I think we can't really break this bottom of the curve very much. Otherwise, we're going to have collateral problems in the banking system. So what I'm looking for is that the governments are looking for assets to start rising again in order to equalize the debt balance sheet. And on this $1 trillion plus capacity which we need, basically just in the United States, and now we just added Japan, we added Europe, the money creation is going to accelerate quite dramatically. Now, will we be at 2,500 or 3,500 by May or next year, or by May 2016, 70s? I don't really know. The main reason is we have massive interventions by the Western governments to keep stability in the system.
Now, before I let you go, I just wanted to ask, with metals being where they're at and the way they've been performing in the last 18 months, For investors, what kind of insights do you have in the metals market?
If you actually look at the metals itself, and you look at in almost any other currency than US dollars for the year, you're up. Every Asian made money this year in buying gold, and he's been protecting himself of the currency debasement for centuries. So I think the Asian demand actually will accelerate as we see further weakness in Asian currencies, and this weakness will materialize as our export numbers start falling off. So it's fantastic to look at it as a currency and not as, a metal. And here it's been dowry, it's been wealth, and I think that will continue to be like that, and the East will basically continue to take the oversupply of the metal off, particularly as it's basically trading below cost anyway. So it's a bargain basically to accumulate these issues.
Excellent. Thanks so much for your time today. Great speaking with you.
Appreciate your time, and you have a good day.
And thank you for tuning in. If you have any comments or questions, you can always send them to newsfeedback@kitco.com. Have a good one.